Ever wondered how some traders manage to profit from the ever-fluctuating cryptocurrency market, seemingly unaffected by the highs and lows? The secret might just lie in a strategy known as crypto arbitrage. Crypto arbitrage capitalizes on price discrepancies across different cryptocurrency exchanges. As you may know, the price of a particular cryptocurrency can vary from one exchange to another. This is due to factors such as supply and demand, trading volume, and even geographical location. To understand this better, picture a scenario where Bitcoin is selling for $20,000 on exchange A, but is available for $19,500 on exchange B. A trader could buy Bitcoin on exchange B and then sell it on exchange A, pocketing a cool $500 profit minus any transaction fees. So how does one go about this? Step 1 is to identify the arbitrage opportunity. This involves closely monitoring the prices of cryptocurrencies across various exchanges. A keen eye for detail and a knack for quick decision-making become indispensable here. After spotting a discrepancy, the second step is to execute the trade. This means buying the cryptocurrency at the lower price on one exchange and simultaneously selling it at the higher price on the other. Remember, speed is crucial. The cryptocurrency market is highly volatile, and the price discrepancy could disappear in a matter of seconds. The third and final step is to repeat this process, constantly looking out for new arbitrage opportunities. It's a game of perseverance and constant vigilance. However, it's important to note that crypto arbitrage is not without its risks. Transaction fees, withdrawal delays, and price changes during the execution of trades can significantly impact the potential profit. Moreover, the risk of an exchange suddenly going offline or becoming insolvent is also a reality in the crypto world. So, to sum up, crypto arbitrage is a strategy that takes advantage of price differences across various exchanges. It involves identifying an arbitrage opportunity, executing the trade quickly, and repeating the process. While it can be profitable, it's essential to consider the potential risks and challenges involved. Like any other investment strategy, it's not a guaranteed path to wealth, but with a sharp mind and a keen eye, it can certainly be an exciting way to navigate the highs and lows of the cryptocurrency market.